Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
Okay, let's bring on board Tushar Bohra, partner at Invexa Capital, to talk to us about fundamentals. Tushar, very good morning to you. I'm Harsh. Let me first start off by understanding your take on the market itself. We've seen largely, rather a 5% downtick when I'm looking at the last 12-month period on the Nifty. Has this long period of consolidation now finally, is it likely to end in your opinion? And talk to us about earnings re-ratings as well. Do you expect earnings growth to bounce back sharply, H2?
Yeah, so in fact, if you see last few quarters, earnings have been on the Nifty a bit soft. Relatively earnings growth has been much lesser in the last, say, maybe 4-5 quarters. I expect going forward, earnings momentum should pick up substantially from here. So quarter on quarter, we are likely to see, the momentum be much stronger. And over the next couple of years, I would expect possibly, double-digit earnings CAGR on the Nifty. So markets being a slave of earnings, likely that as earnings momentum picks up, market should also see some kind of a decisive move. But maybe, we are still a few months away from that. Another 6 to 9 months, we might see more volatility, possibly led more by global factors. And then as the earnings, start to be visible, the earnings growth starts to be visible, we'll see maybe another round of upside in the markets.
Right. Okay. Tushar, hi, morning. So wondering what's the best way to actually capture this CAGR growth on the index? Because, India has always been a stock picker's market. You're in the right stocks, you're happy. Otherwise, a large part of the market has done nothing as it has in the last 1 year.
Yeah.
What's your portfolio tilts like right now?
So in fact, post-COVID, we had a much broader rally across multiple segments. But if you see, and especially in the last 12 months, only a few pockets have done well. The last time I was on ET Now, I maintained the view that it will remain a stock pickers or a bottom-up markets. Not everything will go up. Looks more like the same right now. I would prefer domestic cyclicals, domestic consumption over exports-oriented sectors broadly right now. I think banks and NBFCs should, do very well from here. If you see the last few months, relatively, they have been much better placed than other sectors. And I think they will continue to lead the, maybe the next round of upside in markets. I would also look to play domestic discretionary consumption. We as a house are increasingly bullish on discretionary consumption. You'd remember I mentioned spirits the last time I was on your show, and we continue to like that space. I think autos and discretionary consumption in the last, couple of months have really picked up, and possibly they will continue to do well from here. We also think that power and utility space, energy space, we might see another round of upside. Most of the names in that sector have been relatively subdued in the last, say, maybe 6 to 9 months, maybe last 12 months. I expect maybe another round of upside in that space. Continue to be bullish structurally on pharma for the longer term. In fact, interestingly, if you see the last quarter, we see very, very interesting developments in the IP space. A couple of companies, we've seen a large landmark milestone out-licensing deal in pharma. We've also seen one of the first, real major IPs from India. The NDA has been, the product has been filed in US. So definitely a lot of interesting developments. So alongside CDMO, IP is another space in pharma which we continue to track and be bullish on. And one counter consensus possibility could be IT. While there's a lot of negative news and noise around that sector, but I think most of the hedge funds possibly are short on that space. Most domestic fund managers are possibly underweight on IT. There might be a counter consensus possibility of a move, a short-term move in IT.
Got it. Tushar, let's unpack that a little bit more. Consumer discretionary is what you like. You've spoken about auto, but auto has run up significantly. I understand you're still bullish, just trying to get a sense of how bullish. And yes, you've also spoken about Alcobev. That's probably one industry where you're positive. Outside of that, any better way to play consumption? Because there are just so many themes where consumption is concerned.
Yeah, so I think if you see, retail has done well in the last, few months. That possibly could continue. On the auto eyeing side specifically, I think we've seen a bit of a rally in select names there. Going forward, possibly be more stock specific there. Unfortunately, I can't name individual stocks, but definitely there are a lot of auto stocks, auto ancillary stocks, where we see strong earnings momentum likely over the next 12 to 24 months, and we'd like to play that sector selectively. And discretionary consumption, I think GST beneficiaries, definitely you should look for wherever the GST cuts, the recent incentives given by the government will lead to a upside in the consumption. But I expect discretionary consumer will be an overall broad-based rally rather than trying to pick specific stocks in that space.
Tushar, let's pick up these sectors one by one. And you did talk about auto and discretionary spend, but banks and NBFCs, because one way of actually playing this consumption uptick is also via NBFCs, right? But when it comes to banks, would you say it's time to perhaps go bottom up, or would you say the large are only going to get larger?
So if you see what's happened on the banking space, especially the moves by both government and RBI in synchronization for the economy, have been very interesting. RBI in this last 1 year has in a systematic series of steps done a lot to improve liquidity in the entire economy. They've done a substantial rate cut. They've also now with the recent measures done a lot to incentivize banks to do more risk taking. So markets, investors are rewarding banks for probably being more conservative, say over the last couple of years. I think going forward, we'll see a lot more risk taking by the banks. We'll see a lot of lending activity pick up. In fact, the government has also played its role by incentivizing demand through the GST. First, the direct tax measures, and then the measures on the GST side. And with the RBI, incentivizing banks to pick up the credit. I think overall we expect banks and NBFCs will continue to lead the rally. Of course, certain banks and certain NBFCs, those with stronger balance sheets as well as an aggressive outlook, will do better than the others. But possibly it could be a basket approach with weights favoring specific names within the sector. And I think PSUs in particular, I continue to like the PSU banks as a space. The price to book is very reasonable there. Growth expectations are strong for the next few quarters, and possibly they might be one to watch out for alongside the larger private banks.
Okay. Tushar, shifting focus to metals, it's been a non-stop runner in 2025. What's your take there? Do you believe a bit of a pause warranted given the kind of traction we've seen? 10,000 plus now on the Nifty metal.
I think so long as the uncertainty continues globally, we will see volatile moves in the entire metal space. Again, I don't want to play a broad-based metals rally. Will probably be stock specific here. Aluminium stocks, I think we continue to find, we continue to prefer a few names in that space. But I am not, it's not a broad-based sectoral upside call in metals. Will probably remain stock specific there.
Okay, interesting. Tushar, always good chatting with you. Thanks for